Steve Leisman, thank you very much.
My pleasure.
Go to another Steve. While the election is a key focus, the recent market volatility is grabbing the attention of investors and corporate executives alike. The Conference Board out with its quarterly survey, and it found that CEO confidence declined slightly in the third quarter. Here to discuss the results and a couple of other corporate stories, Steve Odland, President and CEO of the Conference Board. He's also a CNBC contributor. Steve, welcome. Good to have you with us. Why don't you give us the top lines on the CEO survey? They seem reasonably positive, CEOs do, but maybe not as positive as they were a quarter or so ago.
Well, CEOs generally are in neutral, Tyler, and it's the same thing as consumers right now. They're waiting for inflation rates to come down, and they're waiting for the Fed rates to come down. So the CEO confidence index is done on 0 to 100, with 100 being perfect. We're sitting at 52, so it's marginally positive. People are saying, hey, things look pretty good, but they're still waiting here. And this is a huge change from a year ago. A year ago, people were predicting that we were going to have a big recession. And that is no longer the case. That has diminished now. You still have a few people, and it depends on the industry. But for the most part, CEOs are not predicting a recession here. A big change. So you look at what's happening in the marketplace. You've got inflation rates coming down. You've got wages still kind of going up. You've got CEOs hoarding their labor, not huge layoffs. And the market's still pretty good here, a few points from an all-time high. This is what a soft landing looks like, Tyler.
It's interesting. The CEO's assessment of current business conditions, that is what they're seeing today, is worse than 6 months ago. But their expectations about the short-term outlook improved. 32% expect economic conditions to improve over the next 6 months, up from 30% in the second quarter. So you see them looking forward in a more positive way than they assess the current landscape.
Yeah, it's exactly right. And it's tied directly to their expectations that the Fed will reduce interest rates, discount rates, between 25 and 50 basis points between now and the end of the year. That means that their borrowing costs will come down. Consumers will be able to borrow. Sales should pick up. So there's some optimism here in these numbers, and it's all tied to the Fed.
I guess the sort of, as you say, it's all tied to the Fed. So if the Fed doesn't cut, then is this out the window?
Yeah, it is, because then we're going to be stuck in neutral longer, and you've got the status quo. But nobody's saying that the Fed is not going to cut. They think they're going to start here. Now, the Fed is under a lot of pressure from both parties. It's an election year. There's political pressure, but there's also good signs, and they're saying that they're going to move. So I think that CEOs are taking them at their word. Let's
talk for a second, Steve, and what are companies going to do about these increased calls for them to cut prices?
Well, look, it's an election year, and you have to take it with a grain of salt. Politicians should not be calling for a state-directed economy, okay? So they shouldn't be telling companies to lower prices. What they should be talking about is their policies that they will champion in order to make business conditions better, that will allow inflation rates to come down. Companies aren't out there charging usurious rates. Their fees, their costs are going up. The cost of labor is going up. And companies are having to pass some of that on to consumers. And, the politicians here need to adjust to that.
I mean, we say it's all talk, but it's talk until everyone's talking about it. And then, someone they feel like they have to do something. I don't know. How have they typically handled? And listen, it's not just that politicians are calling for this. A lot of companies are finding they have to do this because consumers are balking at what they're charging. So it feels like it's coming from both sides. Yeah.
Well, that's the market, Kelly, and we got to let the market work. That's what we're all about. And companies will, cut their margins, and they'll take profit declines if they need to. They're trying to work it back up. Our CEOs are telling us that they're doing everything they can back up through the supply chain to make sure costs can come down. But look, you've got to take it all with a grain of salt because of the election season.